Reserve Bank of India has indicated that they will be injecting more liquidity. Now, enough and more assumptions have been made in the NBFC sector. One view is that NBFCs will lose a lot of market share. Second is that cash crunch is going to ensure that their margins will remain under pressure. But the Hain brilliantly articulated in the morning that for NBFC sector per se 2.0 has started, which is that when you are in the first phase of a boom, everything and anything will go higher. Balance sheets will expand. It will look like the go-to sector. And at the peak of NBFC boom, which is not very far away, like 3, 4, 5 months of just before, family offices, small companies, everybody had moved into NBFC space. But now I guess the differentiation has started. And so to understand the terrain for 2019 RBI move on OMOs, let's connect with Digant Haria and giving him companies. You got Prabodh Agrawal, Group CFO with IIFL. Prabodh, good morning. Thank you for joining us. Prabodh, how's business been for you post the IL&FS crisis? Are we in for a little bit of slowdown or a shock therapy when it comes to this quarter?
So talking about liquidity, the liquidity situation has actually significantly improved from the the second fortnight of September when the IL&FS default occurred. Since then, the availability of funds and the cost of funds both have improved significantly. And at that point of time, there was concern that there could be more NBFCs which could default, because of the liquidity crunch and all that. Now that concern has also passed. That time there was a situation because suddenly, the funding tap was switched off for the NBFCs, by the mutual funds primarily. And because of that, there was scare that even the healthiest of the NBFCs may run into ALM issues. Now all that sort of troubles seem to be behind us. As I said, the funding cost has improved significantly. The CP rates, now we can see, the CP rates have broadly normalized over the last 2.5, 3 months. I would think that for a AA or a AA plus rated company, the CP rates have fallen by almost 125, 150 basis points since the peak of end September. So I would think that the ALM issues are now broadly addressed. The question you asked about, this quarter and the outlook for the next quarter, I believe, this quarter many NBFCs and HFCs have not grown much. The AUM growth would be flattish, and the companies have used this quarter to correct their liability side. So a lot of CPs have been repaid. I believe at an industry level, about 20 to 25% of the CPs for the NBFC and the HFC sector has been repaid, and more probably will happen towards the end of December. And because there is hardly any AUM growth, so this whatever the NBFCs could raise in the form of long-term resources, in the form of either sell down a portfolio or NCDs or term loans, that has been used to repay the CPs.
So Prabodh, you were 2 businesses or 3 businesses, 3 large businesses: the NBFC business, the wealth management business, and the insurance business. Let's talk about the wealth management business. Irrespective of what the hum or drum in the NBFC business is, can I safely say that that business is intact because mutual funds are growing, clients, rich Indians, they want to invest more, HNI fraternity is only getting more gratified. So whatever will happen to the entire interest rate cycle or liquidity, at least that piece of your business is safe?
That's right. Actually, the thing is that the wealth business, there were concerns that because of the not so positive outlook on the equities, the capital market business or the wealth business would also get affected. But that's not true. Actually, even in the second quarter, our net new capital raised was about 5,000 crores. And we think that, for the full year, we'll be able to raise net new money of around 20 to 25,000 crores. So, in this kind of environment, what happens is that probably the inflows move more towards debt funds rather than equity. So there will be some shifting away from equities into debt. But as long as people are saving in financial assets, which is what is happening, I think the outlook for the wealth business remains robust.
Digant, we've been, quizzing you on a regular basis, trying to understand your thoughts as to how should one read into this entire NBFC, crunch. But do you think Now it's time to forget about IL&FS issue, time to forget about liquidity. Now one should focus on what steps RBI is doing, and the liquidity crunch is over. And if this quarter lending may have suffered, but next quarter it could be back to normal.
No, hi Nikunj. Not really. A crisis should never be forgotten, and I think the same applies for this NBFC issue which happened in the last 3 months. Let's see, this every crisis does the same thing, right? It weeds out the weaker ones, and it actually strengthens the stronger ones. And I think this crisis is no different. Now the nerves have been soothed because investors, bankers, and everyone knows where the pockets of stress are. So there are two very clear pockets of stress which have emerged, which are the developer loans, or what we call as the wholesale loans, and LAP, mainly the large ticket loan against property loans. So this is where the entire pain is. A lot of us knew that there is pain in this sector even before this crisis happened, but it's just that this crisis serves as the tipping point for everything to come out in the mainstream. So I think these two pockets, they have been isolated as places where there is stress. So NBFCs who are very heavy on this segment, I don't think it's still time to party. We will see some more defaults, some more adjustments to their business models which will take place. So I think bearing this one pocket, I think we can talk about the other spectrum of NBFC, which I think if you just leave apart the December quarter where growth and margins both will not look very good, I think then life will slowly come back to normal, and the good business models like gold finance or SME finance, which banks have really not been able to do anything, I think you will slowly and steadily reach back to the past glory and maybe beyond that. So that's the short summary of what we think right now.
Right. Digant, so what is the right approach? What is it that you do with NBFC stocks? Because as always, you want to separate the men from the boys within any sector. So do you sense that all the flows would be restricted to a Bajaj Finance, or do you think now with things easing up a bit, this could be a lot more spread out? And if that were to be the case, what are your top picks?
So see, I think our approach now, or any investor now, we all have to differentiate NBFCs, because there are more than 85 of them which are listed. There are 6 or 7 very different models. So what has come out very well is that, see, there are few business models which banks cannot really do. So gold finance is one of them. Muthoot Finance, Manappuram Finance, we have been positive on Muthoot Finance for a very long time. If you just look at the economics of this business, it's a 3-month product. So it's one of the only NBFCs which have a positive ALM gap. So not impacted by this crisis. They'll still be able to do a good margin because their pricing power is good. And banks cannot enter this business overnight. So I think except for maybe December quarter, which can be a little slow, I don't see that how the long-term case for this company or this sector gets disrupted. So investors can definitely look at this sector. Then you look at the MSME sector. That sector has been in pain for 2, 3, 4 years. But that is a segment which banks have not really done anything. So the SME definition for a bank would start from 5 crores, whereas the SME definition for an NBFC like a Shriram or Intech or someone else would start at 20-25 lakhs. So I think this 20-25 lakhs is a segment which banks will probably not be able to do even for the next 5 years. So that is a segment where somebody can search for ideas. Two-wheeler finance is something which will actually become the dark horse, because the two-wheeler prices have actually gone up by 12% after a very long time. And when the prices of your underlying goes up, you need financials to push your sales. So I think beyond Bajaj Finance, there are business models which are good, who serve a genuine need, and which are definitely going to be there for a long time. So I think Bajaj Finance has done its bit. It is a leader. It has not given any damage to your portfolio. So maybe it's time to look at other models which are good but which have fallen just because the market sentiment was bad and maybe the funds had to sell for some compulsions. So beyond that, there is life. We just think that we'll be a little careful in housing finance and wholesale finance sector, because there will be pain which will keep on coming, and banks are very aggressive. We hear that ICICI Axis under the new leadership will focus very intensely on retail products, mainly housing finance or mortgage loans or large ticket SME. So I think that is a space where investors can think of trimming and probably moving to NBFCs which have a niche. Microfinance is something we used to like. We still think it's a model which banks cannot do, but then there are some risks in the form of over leveraging or these farm loan waivers which may be announced in the run up to the final elections. So I think our preference stays with gold finance, two-wheeler finance, MSME finance, because we think these are really niche products and they serve the bottom of the society. So that is something which no politician or no action can actually ignore for a very long time. So I think that's where we should gun for returns, because Bajaj Finance may not give you a very sharp bounce because it's not fallen in the first place.
All right. So as we conclude this discussion, Prabodh, could you give us your final thoughts or your concluding remarks on what would be your preferred stance on looking at the story for NBFCs going forward from here? You would see, and it's understandably so, as the glass half full. But is the worst behind, and can we look at a brighter 2019 for the space?
So I believe a lot of adjustments on the liability side for the NBFCs and HFCs has happened in the last 3 months, and the ALM rebalancing has happened. A lot of short-term borrowings, including CPs, have been repaid by NBFCs and HFCs, and therefore we did not see any AUM growth, probably very little AUM growth in the third quarter. But now that bulk of the rebalancing has happened, I would think that the growth would resume in fourth quarter, although it would not be to the level of the first half of this year. It will still be slower, but still you would see a decent growth in chosen sectors. For example, we are a diversified NBFC and we are focusing on 3 or 4 products, including home loan, gold loan, microfinance loans, SME loans. These are our chosen areas, and we see enough opportunities to grow now after the rebalancing in the previous quarter.
Okay. Thanks very much, gentlemen, for joining us this morning with your perspective on NBFCs and the road ahead for the sector.